Joining us, the government is unlikely to sell any more sovereign gold bonds. We learned from sources that the sovereign gold bond scheme is currently one of the most expensive and complex instruments for the government to manage. The scheme was launched in 2015 to curb gold imports that had led to an increase in the current account deficit. Sapna standing by now with more. Sapna, take us through the government's rationale for pausing or putting on hold any further tranches of the sovereign gold bond.
Quite some time, North Block has not been very comfortable with the idea of the continuation of the sovereign gold bond scheme. And I suppose the reasons are pretty known by now. Of course, one is the exponential rise in the gold prices, which was not very much anticipated. This coupled with the exchange rate movement, the rupee depreciation in the last 2 odd years, that has also pushed up the cost of the SGB, so to speak. Plus, the bond scheme itself carries a lot of benefits like capital gains tax exemption, then you have a fixed coupon rate, and the other 2 factors that I've said. So all put together, this is a tidy sum as far as the borrowers are concerned. So, all gains for them. But for the government, the liabilities are really shot up. If you look at the 2019 gold stock that the government was holding through the SGBs, that was worth around 10,000 odd crores, which is now shot up almost 9 times to around 85 odd thousand crores. So keeping all of this in mind, it may just be possible that at the time of the H2 borrowing calendar decided by GOA in consultation with the RBI, they will most likely down the shutters on the SGB. And as of now, what we are given to understand is that there is no alternative that the government has in mind in terms of the sovereign gold bond scheme. So I suppose in future years, only the redemptions are going to continue, but no further tranches will be there.
Okay, Sapna, many thanks. Sources also tell us that the government